Hey everybody, it is Greg Gossett from Gossett Trading and Mentoring Live, and today is Friday, March 13th, 2020. We are in the last hour of the trading day and the last day of the trading week. Boy, what a week it's been. Thank you so much for coming today. I always appreciate seeing everyone here. I think we have such a great group, and I always look forward to seeing you. So, all right. Just want to make sure everybody can hear me okay. If you can, maybe say hello just so I know that we are streaming and everything looks good. Everything looks good. Okay, there's Evan. Hey, Evan, how you doing? Good to see you, sir. Kamal, hey, Kamal, how you doing? Evan says, happy Friday the 13th. Yes, happy Friday to you for the 13th as well. I remember when I was a kid, my dad took me to see Friday the 13th. Holy smokes, that was scary when you're a little kid. Zach is here. Hey, good to see you, Zach. Looking forward to hearing about your trade that you sent me. Hello, Deanne. Nice to see you as always. Happy Friday. Hope you and the dogs and the cats are all doing well. Okay, we're in the final hour of the trading day. As I mention each day, in my opinion, the most valid prices to make your buying and selling decisions from are the prices as close as you can get to the close of the market. And I mention this because during the day, you have the day traders, you have the algorithms, they're moving it around, they're battling it out. I consider it mainly noise. At the end of the day, you have the large financial institutions come in, they take over the market, they take over the pricing, and they move the pricing to what, in my opinion, is the most valid prices of the day. And that's why I make my buying and selling decisions primarily at the end of the day. So, another crazy volatile market. We are currently up 859 points on the Dow. We're up about 4%. NASDAQ is up NASDAQ is up 260 points, up about 3.6%. And the S&P is up 96.7.389. So Dow Jones is the winner today. So all right, let's take a look. So Dan is here. Hi, Dan. Good to see you. Miko25 is here. Always nice to see you. Thank you for coming by. Gamer Squad, how's it going, buddy? Good to see you. Hope you're having a good day, Dave. Quad Racer, can hear you loud and clear. Happy Friday. Thank you. Appreciate that. And happy Friday to you as well. Okay, well, listen, here's the plan for today. First of all, I'm going to run the U.S. legal disclaimer. Secondly, you're going to come back, take a look at my current positions, talk about when I bought them, why I bought them, how I'm going to manage them going forward. I did have one intraday trade on Apple. We'll talk about that as well. I don't think we have any current trades from anyone up on the board, so we won't do that. Next, we're going to talk about trader psychology. Extremely important in this market. Extremely important. Boy, if there was ever a time where discipline and position size, well, the two together, position size, and then the discipline of entering and exit your trades when you're supposed to. Boy, if there's ever been a time that this stands out, you can really make a case for why it's so important. It is right now. So we're going to do a few minutes on trader psychology. We're going to talk about some good trader psychology stuff like we do every day. I hope by me doing this each day, you will kind of internalize it and it will become part of your trading, because trust me, you need it. You need it to be to survive in the market, and especially this kind of market. After that, I have already gone through my watch list. I look for a combination of three. I have three requirements before I enter a position. Requirement number one, I look for a confluence or a combination of indicators. I look at each indicator as a potential group of buyers, and you'll put yourself in a much better position, have much better odds to have a profitable trades if you're with the company of as many other buyers as possible. So therefore, one indicator represents a group of buyers. That's good, but two or three indicators or two or three groups of buyers coming together as well is even better. That's step one. Step two, have to make sure you have a good risk to reward ratio. You can have a really good setup, but based upon what the resistance is above you compared to the distance to your support below, may not be a good risk to reward trade. So we not only do we need a confluence of indicators or buyers, we also need a good risk to reward, and then correlation and account heat is extremely important here. Correlation means that you don't want to have too many of the same type of stocks, same industry of stocks. If it goes up together, then you're doing great, but if it goes down together, you're doing 2 or 3 times worse, because one tech stock is probably going to go down with the other tech stocks. So in this kind of market, extremely important that we have diversification in different types of industry. And then equally as important, no matter how much diversification we have, we don't want to have too much account heat. Heat means how much of your account you actually have at risk. 60% is my maximum that I will ever have at risk. So if I had a $100,000 trading account, I may have 6 positions maximum, right? If I have a 10% position size, I would have 6 positions maximum. Or if I had 5% position size, I would have 12 positions maximum. But it's a little hard to manage 12 positions. So, I usually have 3, 4, 5, 6 positions at my maximum. So if I find something I've already gone through, I've marked a few, we'll see how the market looks at the end of the day, and whether or not I'm going to take any trades. Now, I did make several options trades today, and I will go over those and why I did those as well. Then during the podcast here, if you have any questions, please feel free to put them in the chat. If you'd like me to take a look at any symbols, I'm happy to do that after the market closes. If you find something that you think's really interesting, looks interesting, and would be helpful for the group, please go ahead and just put it in the chat. But put a star by it so I know that it's time sensitive. Otherwise, I'll leave the other ones till the end of the day, till after the market closes. But if you really would like to get my opinion on something, and like I said, you think it's helpful for the group, put a star by it so I know that it's time sensitive. Okay? Well, listen, hang tight. I'm going to run the U.S. legal disclaimer, and I will be back in about 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. Hey, Mount Doji's here. Good to see you, Mount Doji. Hope you're doing well, my friend. Joe Turner is here. Nice to see you, Joe. Always glad to have Joe here. All right. Well, what a day, huh? What a day. Well, let's get to it. Let's go through my positions. Oh, wait. Let's take a look. Frank has a poem for us. How you doing, Frank? Good to see you, sir. All right. Let's see if I can not butcher this one. Frank, here's Frank's poem. In the eye of a hurricane, you find peace and calm. Almost noise and all the tumult, stock down, it's not your fault, market's wild. Brought it to a halt. 2,000 points in a thunderbolt, who knows why, just stay in the eye. Okay, I butchered that one. In the eye of the hurricane, you find peace and calm. Amidst noise and all the tumult, stock down, it's not your fault. Market's wild, brought to a halt, 2,000 points in a thunderbolt. Who knows why? Just stay in the eye. Thank you, Frank. Always appreciate those. Always look forward to those. People really like those on Twitter. People really like those, and they should, because they're just really good. It's really good stuff. You and Joe, I mean, that's fantastic. Hey, Bing He, good to see you, my brother. Nice to have you here. Joe has a poem. The market's like a lion who's ready to pounce. It opens this morning and made a slight bounce. My friends came to me and said to buy solar. Stay out of the markets now, because you know it's bipolar. Wow. Excellent, Joe. Excellent, Frank. Thank you so much. We'll read that one again. The market's like a lion who's ready to pounce. It opens this morning and made a slight bounce. My friends came to me and said to buy solar. Stay out of the markets now because you know it's bipolar. Man, you two should get together and have a trading poem book. I mean, if that wouldn't sell, I don't know what would. Never seen one of those before. So, okay, SPY trade. World famous SPY trade. Has not been so world famous lately, but at least it's been pretty good today. Anyway, in case we have some new viewers, I do want to go over quickly why I do buy SPY every day at the close and I sell it first thing in the morning. This is from Lizanne Saunders at Bespoke Invest on Twitter. They did a long-term back test. They did it from every day since 1993. Two options. First option, buying the SPY at the open each day, selling it at the close each day. So buy in the morning, sell in the afternoon. If you did this every day since 1993, you'd return a negative 13.9% return. However, if you do the opposite, which is what I do, buy the SPY at the close each day, hold it overnight, sell it first thing the next morning. If you'd have done this every day since 1993, you've had a positive 634.2% return. Past performance is no guarantee of future results. Boy, is that true. That goes for any trading approach. But you want to look for something that has an edge over the long term. Your edge does not always play out. Even with casinos, the edge does not always play out in the short run. But here's the equity curve of the two. The blue is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. You can see that the buy in the afternoon, sell in the morning over time has had really good performance. Doesn't mean it goes up and down. Boy, this is what I feel like I'm in right now since using this in 2020. I mean, it's been brutal, right? It has been brutal, but have to look at this at the long term. But you know, if I would have used my whole account on this, I'd be hurting bad. But again, that's the importance of position sizing. You know, if you have a 10% position size and something gaps down 5% on you overnight, well, if you use your entire capital, you'd lose 5%. But with the 10% position size, you'd only lose a 0.5%, right? So you have to make it meaningful if it goes up. But if it goes down, it can't be too damaging, and that's what's so great about using a 5% or a 10% position size. So with that being said, I did finally get a good trade here on SPY. I bought SPY here yesterday at 248.11. Sold it this morning right at the top here at 263.34. I'm just amazed the distances of these overnight SPY trades. I mean, they used to be $1, $2, $3 one way or the other. Now they're $15, $20. It's insane. Last few days I have been taking only a half position. So yesterday I bought here, got whooped up on down here. Luckily it was a half position. Today I bought here, sold up here. Obviously I wish it was a full position, but it was not. Until this volatility settles down a bit, I'm just staying with a half position. But I am grateful that I got in at 248.11 and got out at 263.34. So I will be buying this again today, holding it over the weekend, which is scary. But again, it will be a half position. Okay, couple things here on Apple. If you recall, I did sell puts on Apple expiring today at $245. I like the support of the 200-day moving average. Yesterday got pretty close. This is way too close for comfort, getting really close. It closed at 248.23, gave me about $2.23 protection. Otherwise, I would have had to have made a decision. I would have had to get out with a loss, or I would have had to have the shares transferred to me and taking the shares. Although that's why I wrote it down here at 245. I did kind of like the idea of maybe having and owning and then managing a regular Apple position here near the 200. But it's up nicely now. So with any luck, we'll be able to hold $13 worth of gains here by in the next 45 minutes, and it does, I'll be able to keep all the premium. And it was a pretty high premium, I got to tell you. It was pretty high premium for the time duration. So Anyway, this looks like it's probably going to work out okay, and then I'll be out of the position. Intraday, I did buy Apple here on the 39-minute chart. I bought it here at 261.56. We moved up into the value zone. We came back down. We made a beautiful V2. Here's day one. Here's day two. Day two washes out day one. Day three closed above one. So I did get in here at 261.56. Next bar went down, rallied back up. Next 39-minute bar did go into the profit for me. But during this 39-minute bar, we got above the 50 RSI and then closed below. So I did have to get out for a quick loss. Not too bad, 260.33. So I got in at 261.56, got it out at 260.33. So took a small loss, very small position size. Was glad that I got out because, boy, did it haul butt down again, right? Now we are getting close to triggering another higher low V2, but I'm not going to take this trade just because I don't want to have to manage it while I'm doing the podcast. So now, as I just mentioned, it looks like these puts here are going to expire in the next 45 minutes. So I'll get rid of this. But what I did do earlier today, I rewrote puts back down here at $210 expiring next Friday. The volatility is high, so I do get a lot of premium. Gives me about 20% protection to the downside for next week. And, they paid. I actually bought, I had some different prices, some of them at $2. That's $200 per contract, and then some other ones I got at $180 per contract. So I did write puts again down here. As long as it doesn't close below 210 by next Friday, I'll be able to keep the premium. It's important when you write puts. The best time, in my opinion, to write puts is when the volatility is the highest because you get the most premium. And statistically, generally, the fear is so high and the premium so high that more times out of not, it does not get down. So to the strike price and what the premium that you were paid for it. So anyway, we'll see if $210 hold. That's the 100-week moving average, about 20% below where we are. I guess it could get down there. I did like that's wrong. It's the 200. Let me make sure. Now I'm confused. No, that's right. 210. That's right. So anyway, we'll see if these hold down at 210. SPY. I also wrote puts today on SPY down here to the $200 level. It dovetails nicely and has the support of the 100-week below. This gives me about 23% protection to the downside as well. And then I also sold some Qs, and this is till 320. So yeah, so that's a week. And then I also sold some longer term puts. I sold some longer term puts on the Qs expiring June 30th down here at $130, giving me almost 30% protection to the downside. And lastly, I rounded it out with Exxon. I did sell puts on Exxon down to $25, which gives me about 34% down as well. So I have some expiring next week. I have some expiring in June. On Exxon, I have some expiring at the end of the year. In this kind of volatile market, I'm concerned about the choppiness, the getting in on strength and immediately reversing. That's already happened a couple times this month, which was pretty brutal. So what I've decided to do is, look at the indexes, sell puts because I'm getting a lot of premium, but sell them 20-30% below, and get that premium. If I have to buy 20-30% below, I'm probably okay doing that. I'm just concerned with the choppiness of the market and the huge ups and the huge downs. The puts give me a little bit more of a wide berth. I don't have to be so exact, and I don't have to worry about whipsaws as much. And because the volatility is so high, the premiums I'm getting are, working out to 8, 10, 15% a year annualized return. So, if I do have a trade, a regular directional trade that looks really good, fits my criteria, I will take it. But I've been doing a lot of thinking over the last couple of days. It's not a way to get rich quick. It's not a way to make back losses that have happened this month, but it's a way to chip away at them without having to be as precise. So anyway, I hope that makes sense. Mount Doji said, of course the overnight I sat on add-on gapped up. LOL, oh well. I know, buddy. I was thinking about that. Well, I was thinking, I wonder if Mount Doji was in or out. I know, that's how it goes, right? And sometimes we feel like we literally have the power. If I just sold everything, I could literally have the power to make the market go up. Does anybody else think like that? All I have to do is sell and the market would rally. I'm sure we all think like that. Hey, Steve Burns. Good to see you, my friend. Always nice to see you, Steve. Hope you are doing well. Holly and the dogs. And thank you for everything that you do. I appreciate you being here. I appreciate, all the wisdom you have. And it's so great to have you in the chat, be able to rub shoulders with the great Steve Burns. Steve says, I hope everyone is staying safe in this volatility. Yes. Well, I know some people aren't. I know some people are not. I don't know, Steve, if you just listen to what I said, but I've decided to focus a little bit more on selling real options way, way down and having a little bit more of a buffer zone at the same time getting a lot of premium for the volatility. Joe says a poem book might start by the guys Frank and Joe. Make sure you go out and buy the IPO. Yes, swish. Steve says a lot of these down moves are setting records. Boy, I'd say I've never seen anything like it. I've been through the 2008, 2009. I've been through the sell-off in the dot-coms, and I don't ever remember this kind of fear. I mean, there's palpable fear. Zach says, can you explain the use of a 39-minute chart? Usually a 5-minute chart is 39 your norm. I use both, Zach. I believe there's 390 minutes in a trading day. So that gives you 10 bars, 10 kind of even bars. I started using 39-minute bars because of Kerry Lavorne taught me that. But if I see a trade on a good setup on a 5-minute, I might take it. But I saw the 39-minute, I saw the setup for Apple on the 39-minute, which looks good. So, I'll look through different time frames, and if I can't find anything on the 5, I'll switch to the 39. Although, of course, these are much slower moving trades because they're longer bars. But anyway, I took a very, very small loss on this with a very, very small position size. So, all right. Trump's speech should add another level of volatility. I know. Steve, you'll understand this, and people that do options understand this. I sold puts on Apple down here at 245, expiring today. This morning, it was $12 above the money. I had 12 or $13 in protection with literally 3 hours to go down on the trade. Can you imagine that? That's how much volatility is still priced in with $13 protection and also only 3 hours to go. Now, because of the time decay, it's almost there. I mean, we only have 36 minutes left. So, it's almost to zero, but with 3 hours to go and 5% protection, it still was out of the money. Unbelievable. Okay. Steve says, great option premium for sellers. This is when the pros like to sell to them. Well, yeah, and I don't know if you heard what I said earlier, Steve, but I've done a lot of thinking about this. I mean, I've had a bad month, and of course, we all want to make it back quickly. But in this scenario, I thought to myself, you know what? I'm getting 6, 8, 10, 12% annualized returns with 20 and 30% protection on the best companies out there. And so I felt like it gave me some real protection to the downside. Didn't have to be as precise, didn't have to worry about the whipsaws because, I'm sure a lot of you, if we have a big rally up, it's scary. It's scary to buy that big rally. I mean, the last couple times we've had it, boom, we've just got whipsawed. Zach says, interesting. Thank you for letting me know. I'll have to try those as well. Yeah, it's good. I mean, it's nothing magic about it, but it just gives you a good solid 10 bars. Steve Burns says, this is a crazy option move. Vega is so expensive and it is crushed into expiration. Yes, I was sitting here watching my P&L on that Apple options trade, and basically Apple was just moving sideways, no change in the price essentially for about a half hour. You literally could see the P&L going up because the time decay is so rapid as we're closing in here on the final hours. So anyway, just real quick, just again, so here on the, well, this is easiest to see. So I did sell options down here, $200 on the SPY with 22% protection for next week, and it still paid $1. Right? Again, Apple, I sold Apple puts for next weekend and next Friday at, sorry, this is probably confusing, $210 for next Friday, and got almost $2. Almost $2 on Apple for next Friday with the 20% protection. Sold Exxon puts, $25 puts here on the yearly chart down to the 50-year moving average, $25, pays almost $3 in a huge return, although it could get down there, right? Just because you have a lot of protection, everybody, does not mean it cannot get down there. It certainly can. So I didn't take huge positions. That's the thing. It's not like I'm taking huge positions. I'm just taking regular small positions. And then the Qs down here to $130 on the Qs, giving me 30% protection. But this is out till June 30th and got $3.50. So I'm pretty covered here. I've got some indexes. I've got the puts with Apple, which is some technology. I've got some oil with Exxon, and then I've got a longer term index there on the tech stocks. So anyway, hope that makes sense. If not, just let me know, and I'll definitely try to expand more on those. Steve says a cash secure put system can have an edge as you get paid to buy what you want at a select price. That is correct. Steve Burns, you tweeted this morning that when we lose 20% in the market, we have to gain 25% just to make it back up. I've never looked at it as such. Can you explain why? Steve Burns says when capital is destroyed, there is less money left, so compounding is not as high on the way back up than it is on the way back on the way up. Yeah, I mean, listen, if you lose 50%, if you lose 50% of your capital, you have to make 100% of your capital just to get back. Does that make sense? Zach, if you have $100,000 and you lose $50,000 just to get back even now you have to make double that 50 just to get back up to 100. Okay, so listen, this is the time of the day that I do like to talk about trader psychology. I think it's so important. There's a lot of great Twitter channels out there. There's a lot of good Facebook channels out there. And the owners of these channels, they spend a lot of time and energy putting out good trading words of wisdom. I read these things every day. I know a lot of these things, but sometimes I'll read something and it really hits home for me. So that's why I like to look through here, look for something that that would be helpful for the group, and then do a few minutes on it. But this is from Julian Komar on Twitter at blog Julian Komar, and it's a great channel. Post some really great helpful things. So if you have not subscribed to Julian, I really would suggest it. But let's see what Julian says. 5 things I have learned about trading. Number 1, market is the best teacher. Number 2, learning will never end. Number 3, money comes in bunches. Number 4, there's no holy grail. Number 5, I want to do this until the end of my life. Number 6, everybody can learn to trade. Number 7, most traders lose money. So let's go through this. Number 1, market is the best teacher. Okay, listen, you can learn a trading approach in an hour or 2, but learning it on paper, doing simulation is a whole lot different than doing it in real time with real money, doing it in the market. So, it's like, I don't know, flying a simulator of a jet fighter, right? Yeah, it's probably somewhat the same, but it's not the same as actually getting in a real jet fighter. So market is the best teacher. The market will teach you a lot of things. Trading in a real live market and having those emotions up and down, that's reality. Just reading a book, you might think you have it, but it's a whole different world. So yes, the market is the best teacher. Learning will never end. That's true. I've been trading for 24 years. I've switched my trading approaches around, and I will continue to make adjustments to my trading approach as I learn different things. But yes, learning will never end. The more experience you get, the more things that you'll realize could happen. And you'll make adjustments, and same with golf, right? Same with any skill. The more you do it, the better you're going to get, and the learning never ends. Money comes in bunches. Yes, it does. And losses come in bunches, I might add as well, right? So it's never going to be just nice and calm and make this much. I'm going to make this much every month. I hear people say that, and I'm like, what are you talking about? Right? I mean, sometimes you make a lot, sometimes you lose a lot, sometimes you lose a little, sometimes you make a lot, but money does come in bunches. So, if you're going for a month or 2 and not making much or not losing much, you can lose a lot, you can make a lot, and it comes in bunches. There's no holy grail. This is true. There is no holy grail trading system, and there's not one best system. There's one best system for you. When do you like to get up? What's your personality? Do you like to hold a long time? Do you like to hold a short time? It's very important to try to find a system that jives and resonates with your own tendencies. Like I said, when you want to get up, what part of the day you want to trade, how much screen time you have. So there really is no holy grail. But the best holy grail for you is going to be one that fits your personality and lifestyle and time frames. Number 5, I want to do this till the end of my life. Well, yes, I think we all do. But this is a good time to point out, if you're not aware of risk management and your position sizing too large and you're staying on the wrong side of moving averages, you will not trade till the end of your life. You will take a big loss. You will have to get out. And as I mentioned all the time, skill comes from experience. Experience comes from staying in the market. Staying in the market will only happen if you position size correctly and get out quickly when you're wrong. Otherwise, you might blow up your account 3 months. How are you ever going to be a good trader and have the skill, right? Remember, this is a marathon. It's not a sprint. Each trade's just one of the next 1,000 trades. Don't put too much time and energy and effort and emotion into any one trade. It's just one of the next 1,001. Everyone can learn to trade. Yes, I believe that. The turtles, the turtle traders, 2 very large, successful traders. One one thought, no, it's inherent. You can only do it by learning, by being born with a skill. The other guy said, no, we can teach it to anybody. Well, that was that was the genesis of the Turtle Traders, and actually the movie Trading Places, also, by the way. But yes, I 100% believe it can be taught. I don't believe it's something inherent, but after you learn it, what's going to make a difference is whether or not you are following your rules. And number 7, most traders lose money. That is correct. Most traders do lose money for all the reasons I talked about before. They took too large a position size. They're not patient. They don't wait for a good setup. But even more likely, they just hold on to losing losses because they don't want their ego to be bruised by having to get out and saying they were wrong. So anyway, 7 things he's learned. Hey, he has 5 things and it says 7. I didn't even catch that till now. But anyway, 7's better than 5, right? So anyway, I hope that's helpful, everyone. Frank says, Liz Ann Saunders stated, we're starting to get a sense of how dire the impact of the economy is going to be. Each day, the news doesn't get better, it gets worse. True. You know, it's a fine balancing line between the news getting worse each day and the market knowing that it's going to get worse and pre-pricing it in. Yeah, it's interesting. It's definitely interesting, Frank, but you're right. It does seem, until we get to that zenith, until we get to that peak, at least with the coronavirus, it's hard to say. I went to the store last night. It was a madhouse. It was literally a madhouse. Everything was sold out. I was like, what is happening? It seems like a movie, right? Okay. Evan wants to look at brew. Boy, that's a big move. It's a nice V2. Here's day 1, day 2, day 3. But I really feel like you would be chasing at this point, Evan. Yes, it's a V2. We went under 30, over 30, under the 200. But if you go halfway the washout bar, you're all the way down to here. That's pretty big risk, and where's your reward? Well, if I look at this, I'd say, okay, it looks legitimate that we could get up to the 50 days. So see the risk here, or the reward here compared to the risk here. To me, it actually looks like it's more of a risk to the downside than it is to the upside. Mount Doji says, Trump's talking now. Okay, declaring a national emergency. We know that. I think we knew that earlier. Okay, so listen. Like I said, I have made several options plays today. Selling premium way down, 20, 30% down. I think that's going to be my move going forward. But I do have a couple here to look at. Here's Berkshire Hathaway. Berkshire Hathaway went under 30, over 30. That's about all it has. It's still under the negative third ATR channel. This is probably going to act as some kind of resistance above. If we turn to the weekly, I do like that it rejected the 250 week moving average. But for me personally, based upon the options that I sold today, I just don't really feel the need of getting into a directional trade here on top of all of those. If there was a better setup, I would consider it, but all this has is a under 30, over 30, and right now looks like a close below the open, which I don't like. Dow Jones under 30, over 30. Okay, that's okay. We're way under the 200-day moving average. If we take a look over here at the weekly, we rejected the 250 week, which is good. But for me probably not enough. We do have a nice RSI divergence. Here we have a low. See how low the RSI is? We rally, we come back down, certainly make a lower low, but the RSI is higher. That's a positive point. But again, I sold puts on the indexes, the SPYs, and the Qs. By me adding diamonds here, I'm just adding more. Account heat. I don't like that so far the volume has been this low, right? The down days, we've had huge volume on the down day yesterday, and even though we have an up day today, we don't have as much volume. If you read William O'Neill, How to Trade Stocks, he started Investors Business Daily. One of his indicators of a bottom is the up day after a big down day having at least 2 times the volume than the down day. And this is kind of opposite. This is a little more than half, but it's certainly not more. I mean, we will have volume coming at the end of the day. Disney, well, under 30. Oh, now we're not over 30. We're at 29. So I don't see anything there. This was one that I considered selling some puts on. I might next week if we go lower. But again, account heat's very important. I have the Qs, I have the SPYs, and Exxon I sold puts on as well. So I'm really not in a rush to add more. I like to stagger these a little bit more. If we go down next week, then I may add some more on Disney. But Disney up nicely today, but still below its 30 RSI. So that 30 RSI is acting as resistance up there. Facebook under 30, over 30, still under the negative third ATR channel, still under the 200-week moving average. So again, with this, I'm probably just going to pass on this. Google under 30, over 30. This is going to be the same with a lot of these big names. Still have the 5-day EMA, still have the negative third ATR channel above. Weekly, we've sliced through the negative third ATR channel or Keltner channel and the negative 100. If we look at the volume, it's up today, but again, the up volume is not that strong. Goldman Sachs under 30, over 30, which is good. Looking over here on the weekly, still have a lot of resistance here above. And oh, looks like the market's going up here, huh? That's good. Let's take a look here. All right, Apple's cruising, so that's good for the Apple puts. Intel under 30, over 30, right up against the negative third ATR channel on the weekly here. We're still under the 100-week moving average. We have rejected the negative third ATR Keltner band there. Up 10%. I mean, that's a big day. Coca-Cola. All right, here's a little something out of the from these other big tech stocks. Under 30, over 30. We are still below the open. We are still below the negative third ATR channel. On the weekly, weekly closing, it looks like we might close above the 100-week moving average, which is good. But I think, and a nice RSI divergence. We have a low, we have a rally, we make a lower low. This low, or this reading of the RSI, which is lower than this, is higher than that. So it's a nice divergence, but MasterCard, pretty good, under 30, over 30, under the negative third ATR channel. We did bounce off the 100-day moving average, which is good. So, this one, yeah, it's really, honestly, it's just about the same. Microsoft is interesting here. We did reject the 200-day at 250, now closing above the 200-day. Let's look at the weekly. Weekly rejected the 50-week moving average. I do kind of like Microsoft here for a directional trade. Because of the volatility, I am looking at buying this. but I would only buy half position of this, and the 200-day would be my 200-day would be my stop. Q's under 30 over 30, but still under a bunch of garbage there. Look at silver, everybody. Remember when I bought silver here? Moved up, got out with the close below the 200-day. Didn't like taking the loss, but you think I'm glad I took the loss? Because under the 200-day. Look at this, it's down 7% today. Unbelievable. We're at a 21 RSI. Oh, by the way, I did want to show you gold as well. I would be buying gold, especially if we get a confluence of this 200-day moving average along with the 30 RSI. That would give me a really, really good risk to reward ratio. And it got down to 32, but I'd like to see it go under. Have a feeling that 200-day moving average might act as some support, or excuse me, a target. Verizon under 30 over 30. Nice RSI divergence here, but I think I'm going to pass on that. So actually, the only one that I'm considering here today is Microsoft with a half a position, because we rejected the negative third, we rejected the 250, we rejected the 200. On the weekly, we rejected the 50-week moving average. And Microsoft is stronger than about everything else because it is still over its 200-day. So we'll see where that closes. Wow, boy, all the puts are doing well. My goodness. My goodness. All right. Andrew says he's talking BS about how great he is. Frank says all traders should read The Madness of Crowds by Charles Mackay. Yes, Frank, that is a really good book. That's kind of a blast from the past. Andrea, BAC. Well, I like this one a little better because you have, not only do you have an under 30 over 30, but you also have a V2. Here's day 1, day 2, day 3. Day 2 washes out day 1. Day 3 closes above day 1's close. So it does give you an under 30 over 30 plus a V2, which is good. And then on the weekly, it looks like we've rejected the 250 week moving average. So that is also good. So that looks pretty good. Kamal bought Microsoft. Yeah. Big day up, big bar up on the 39-minute bar. Hey, Zach, did you not have a trade on something you wanted me to look at today? What was it? Was it Tesla? Intraday? I don't know if it was on the 39-minute or the 5-minute, but let me know. $1,200 points up. It's insane. It's insane. I don't think we'll ever be the same after this. Have to go back to 100 or 100 or 200 points up or down. Oh man. TGT. Oh my. Right back at you. The big down day, right back with the big up day. Zach, yes, Tesla, 1150 on the 5-minute chart. Let's see, 1150. This 1150 right here, Zach, thought I saw under 30, over 30, under the third, over the third. Okay, so we must be off on as far as time frames go. Was this today? You're probably in a different time zone. What time zone are you in, Zach? I thought I saw under 30, over 30. Hey, Jackson, good to see you, bud. Okay, we're up 1,400 points. Oh, nice trade on Microsoft, Kamal. I was trying to be a good boy and waiting till the waiting for the close. $11.50 Eastern, so that's $9.50. Well, our charts might be a little different here. I think it happened here with the under 30, over 30, under the third, over the third. Yeah, then it went back down. It did hold the 30 RSI, and it looks like it would have been worked out to be a good trade. My gosh, look at Microsoft go. Good job, Kamal. Kamal says, I figured it would close below the 200. I will sell it. If it closes below the 200, I will sell it today. Yeah, that makes sense. That makes sense. Woo, Apple's cruising. Oh my gosh, look at that. Look at that. I guess I should have took that V2 right there, huh? Oh, way to go, Kamal. My goodness, those puts of mine that I sold, they're literally... They have gained so much value. That's unbelievable. It's unbelievable. It really is. So I'm going to have to make a decision here on Microsoft if I want to buy it this high. Because the higher it goes up, the worse my risk to reward gets. We're up 1,600 points now. That's probably a record. That's probably a record. Yeah, I think I'm gonna have to let this Microsoft go. I think it's just too high for me to buy right here. Yeah, so the only thing I'm going to be buying here is the SPY. Half position. Let's see what gold's doing through all this nonsense. Down even further. Kamal says, should I sell it here? Man, I don't know. I don't know what to tell you. I don't know what to tell you. I don't, we have the 100-day right above us. Um, I don't know. What have you made? A few percent it already? B. Oh. Oh, I don't have a BB, Mount Doji. Sorry about that, bud. I tried to pull it up, but it doesn't pull up. Jesse, hey, what's going on? Jesse said, thought the president's press conference was well done. Bringing together multiple private companies to work together and provide assistance in quick testing makes current markets currently approving. Well, I would imagine so if we're up 1,400 bucks, 1,400 points. Good to see you, Jess. Always great to have you here, my friend. Jackson says, been bit quiet, Greg, since your daylight savings has kicked in, and soon 5 a.m. to 6 a.m. I like my sleep. I don't blame you, bud. Microsoft 148. That's 7 points. That's 7 points. I'll tell you what I would do if it were me, Kamal. I'm not suggesting that you do this. I'd probably take half the position off. I mean, that's a monster trade. I mean, that's 8 points in 15, 20 minutes, right? Jackson says Microsoft looks too high now. Greg, good work, Kamal. I agree. Yeah, I just, it feels chasey. Who knows? It could go up to another 170 points. I mean, really could. But if it were me, I'd probably sell half. TGT got in at 100. Now it's 101. I don't like it, got right up there. Definitely not as strong as Microsoft. Exxon's looking good. Apple's up 26 bucks. Boy, if there was ever a time for me to take a higher low V2, I would have taken it. I just didn't want to take it because I was teaching. Although, if it rejected this 50 here, I would have gotten out 1,700 points. Well, that has to be a record, right? That has to be a record. All right, so I'm not going to buy anything. I'm just going to buy the overnight SPY trade. But I do have, like I said, I do have quite a few positions here with puts. So I'll have to be happy with that, huh? Okay. So we have about 30 minutes. It's going. That's insane. It's insane. Wow, 1,900 points. Let's get there. 2,000. Okay, that's it. That's it. And let's see. So I got filled on the SPY at 269.32. Anyway, thankful for the overnight SPY trade on that one. 269.32. There's my new entry, half position. Trying to be a little conservative here. Remember what happened last time when we had the big rally and the next day we got just kiboshed. Hey, I did want to show you real quick. My trades today. So sold this morning SPY at 263.34. I did buy that little position in Apple at 261.56. Sold it for a small loss at 260.33. But I did sell Apple 320 210 puts at $2. Now they are at, oh, I can't tell because I have this over here. Anyway, they're way less than that. So I did get $2 just for the week. I sold some other puts here at 180. Sold the Exxon puts at $3. Had that little small loss on the Apple loss. Sold the SPY puts for next week at $1. Sold the Q puts for $3.50 out to June 30th, and then bought the SPY here at 269.32. Just so you can see I'm being transparent with that. But yeah, I did sell a lot of puts today. And had a really good day. Had a really good, fantastic day. Am I happy, thankful for that? My gosh. Okay, so Kamal. Okay. So Kamal got in at 148. Holy smokes, buddy, you made $10. Way to go. Way to go. Man, am I happy to see that. I don't know how many times you're going to make $10 on Microsoft in a half hour. Beautiful. Okay. And target at 100. Okay. Okay, Jackson said, personally, I take some off, but that's me, being he. TGT already rejected the 200-day. Yes, I did notice that, being he. It did already reject. Well, actually, not quite. It was 104.97. We got as high as, oh, you are right. 104.97. We got as high as 105. 105. Yeah, you're right. It did reject. Good call. Jesse said Apple's reopened all of its stores. Yes, that's true. I read that. Microsoft held the 100. So I held it. Okay. Good, good, good. Yes, it did. Zach says, didn't get to hear it, but I assume that means the public must have not minded the Trump speech. Yeah, obviously the market liked the speech for sure. Jackson said, we referring to the Trump speech on coronavirus? Yes, Frank says, I'm in the SPY from the open in order to monitor it. I'm in the SPY from the open in order to monitor it. Oh, you got in the SPY at the open today, Frank? Dr. Jorgen says, good hike. Thank you, bud. Zach says, yes, MJ. Kamal, no money is made until the position is closed. That is true. Kamal says, thanks, Bing He. Saw the TGC too late. We'll have to check it out Monday. Wow. Epic times, everybody. Epic times. Let's see how things are doing after hours. So Apple's down $1.50. Qs are up $1.50. SPY's up about 6 cents. Exxon's down a little bit, down 52 cents. Oh, boy, I'll tell you what. I had a huge day on those Exxon puts. I sold those things for $3. Now it's 125 by 191. I mean, on those SPY puts, I made almost 85% in one day. Wow. The Qs, I made about 30% in one day. Those expire in June. The Apple puts expiring next week, I've made 80%. And then, of course, my 245s expired way above what my strike price was, so those expire. So anyway, wow, unbelievable. What a day. All right. Hey, I don't know if Karen is out there listening to right now, but I'm really looking forward to our lessons tonight. Karen is a new student of mine, and so we're going to get rocking on our first lesson tonight. Looking forward to that. And then I also have another lesson tomorrow with an existing student of mine, Harsh, so I'm looking forward to that as well. So listen, if you have any other questions or comments, want me to take a look at anything, if you want to tell a joke or a poem, go ahead, just put them in. I do want to quickly just put in my daily plug and just remind everybody that I do offer private one-on-one coaching, teaching, and mentoring lessons in the evening time via Skype. It's one-on-one. It's a course, five sessions. Each session is between 2 and 3 hours. I really enjoy teaching. I think I'm pretty good at it. What I teach in those lessons is everything I teach here is just that it's more personable, right? There's interaction back and forth. We do a lot of chart study. The first part of the lesson I teach. The second part of the lesson I have you teach it back to me. I throw a lot of curveballs at you. We look at all sorts of different charts. What's good here? What's not good? Give me the pros. Give me the cons. What's your next type of trade? Where's your entries? Where's your exits? What's your position size? All that kind of stuff. And I think when you're done with the course, you'll have a much better handle on looking at the markets, different formations, different conditions, what's going on with the market. So like I said, it's 5 sessions. Each session is between 2 and 3 hours. It's just you and I back and forth on Skype. I do it in the evening time. It is $1,000, but I do think that it's definitely worth it. I always forget to mention this, but if you are military, I do give a 10% military discount, and I'm happy to do that for all military. So anyway, if you'd like to set that up, please let me know, before we schedule lessons. I do like to have a free Skype call with the prospective student just to make sure we're a good fit for each other and their goals kind of line up with my goals. It's the Skype calls. It's totally free. I promise you there's no pressure. I'm not trying to sell you on anything. I just want to see if we're a good fit. And like I said, my goals line up with your goals and so forth. But if you like to set up the Skype call, please just send me an email. The email's in the description of this video. And then also you can send me a message out on Twitter and we'll set it up. And, if it looks good, then we'll go ahead and schedule lessons. If not, it'd be nice to meet you and put a name to the face as well, right? And then secondly, today, if you like the this podcast or live stream, I would just really appreciate it if you would hit the thumbs up button before you click on out of here. It helps build the channel. A lot of people do need some kind of guidance and learning some good trading principles, and by hitting the thumbs up button, it does help. It does help the channel grow larger. Hey, and I want to thank everybody. I did hit over 10,000 subscribers on Twitter in the last couple of days, so thank you so much for that. And a lot of that goes to Steve Burns for putting me in his Friday tweet that he puts out of traders to follow. So thank you, Steve Burns. I always appreciate being in that along with all those other great big name traders. So I really appreciate that, Steve. Jackson says, hopefully today, peeps, have some nice trades. I didn't watch all of yesterday's podcast, but I'm assuming a little less gloomy. Yesterday was brutal, Jackson. I mean, I didn't have many positions, thank goodness. I had a horrible overnight SPY trade, and I had my Apple puts, which didn't do all so great, but I wasn't too worried about them. But yes, today is fantastic. Jackson, I'm actually been grateful to have been in trading during this time with the whole world climate, as I feel a lot of newer traders would think the market always goes up 100%, Jackson. What else would other people think? It's been going up for so many years. I think this is just easy. That's why I was harping, ever since I've started this podcast about, look, we're kind of up in la la land. Is it sustainable? I don't know, but the main takeaway there is, I don't like to buy above the third ATR, the second ATR channel on crossovers. I don't like to buy above the first ATR on like pullbacks to value. But 4 weeks ago we were up at the third ATR channel, and about the third ATR channel, 92% of prices fail. There was a month or two that was going by there where things were just going up, and I was basically just sitting on my hands. But in hindsight, that was not the place to buy, right? Bing He says, Greg, IBD taught about market strength with a rising tide, raising all boats. With the weak market strength now, SPY is in a downtrend. Does it not favor buying stocks? It does not favor buying stocks. Well, Bing He, that's one of the reasons why I sold puts today instead of buying directional trades, because yes, we had a big day up, but we could have a huge day down again. And with this volatility and fear, that's why I sold puts today, because on a lot of those stocks that I sold puts on, it gave me 20-30% protection to the downside. I don't think they'll get down there. But, another takeaway here is, yes, rising tide raises all boats. That's why I've kind of been fixated on Apple, because Apple, even though it has gone down, the relative strength, and IBD, I'm sure you know about relative strength from IBD as well, but relative strength is when the market's going down. Let's just look at the Qs, for example, or the SPY. Let's look at the SPY. You see how far we are below the 200-day moving average? See how far we are below? Well, now look at Apple. Apple, even though the market was way below the 200-day, do you see how it was still holding above the 200-day? So that's called relative strength, Bing He. When the market's going down, but there are some stocks that are holding and hanging tough. And IBD teaches about the relative strength. So the relative strength of Apple compared to everything else was really, really good. So yes, the market can be going down, but look for things that have better relative strength, because if the market does go up, that's probably going to go up much faster than the others. But as far as it does not favor buying stocks, it's really scary to buy stocks here. But of course, there's a bottom in stocks, and then you have a big blast off just like we did today. But again, that's why over the last couple days, I have been more focused on just some small intraday trades, and I haven't really taken any trades after at the end of the day, except for the SPY trade and then all the puts that I sold today. So I hope that makes sense, Bing He. Jackson says, and as you say, Greg, look to risk as it's been so beneficial to my trade equity. And thanks to Greg. Oh, thank you. Well, I appreciate that, Jackson. And I mean, my whole mantra is I don't worry about making money. What I really try to focus all my attention on is risk. And over the last year, I'm sure everyone was like, blah, yeah, Greg, blah, 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 right? But I've been through this before, and I can't remember who it is now, market wizard Larry Height, that says if you don't take a hard look at risk, risk is going to take a hard look at you. And look what's happened. I mean, I am sure people have been completely blown up, their accounts completely blown up, their lives completely demolished, if not taken. I saw some suicide hotline numbers on some trading things lately. It's not a good sign, right? The only way you're going to withstand this kind of thing is with proper position sizing. So always use proper position sizing. Can you imagine people that were long futures? I mean, with all that leverage, I mean, I'm sure wiped out, completely wiped out. It's very, very sad. Jackson says, and I think mentioned about a month ago, I was analyzing the 2000 to 2010 with the market, and I built that time into my algo to look at the risk, and it's been more profitable over the last 21 days. Ah, interesting. Analyzing 2000, 2010 with the market, and I built that time into my algo to look at the risk. Good. Frank says, Apple has huge impact on the index. Yes, because they're so heavily weighted. They're so heavily weighted. So Apple's down $3 after hours. Qs are up 27 cents. SPY's up 4 cents. Exxon's down 12 cents. Man, I had a huge trade in Exxon. Knock on wood. I don't want to jinx it, but I did sell those $25 strike price for January of next year at $3. Now they're at $2. Well, less than $2. Wow. Oh, wait. Oh, no, that's right. One 15.21s. Oh, yeah, sorry. They're not less than $3. They're not less than $3. So, listen, just quickly, in case we're keeping score at home, my puts did expire here, the 245, so I was able to keep all the premiums, so I'm grateful for that. Take that off. I did write Apple puts again. Uh-oh. There we go. I did write Apple puts down here to $210 by next Friday. So and got $200 per contract. So those looking pretty good. Qs, I did sell all the way down to 130s, expiring June 30th. Got $3.50 for those. Now they're only worth $2.43, so that's good. SPY, sold SPY puts down to $200. For next week, got $1, and now they're half of that. And then the Exxons, I sold the Exxon puts down to $25, expiring January 15th, 2021. Got $3 per share on those. And then, of course, we got the overnight SPY trade 269.32. And then Kamal had a nice trade on Target. Got this at an even $100. Nice. It's already 101.22. And Microsoft 148. Dang, I wish I would have got in there about that Microsoft. But I was trying to be a good boy and I was trying to wait till the end of the day. But at the end, I didn't buy this here because now the risk to reward doesn't make sense to me. But if you're in it, you're looking good. Jackson says, absolutely. My algo doesn't look at profit. It basically only looks at risk avoidance in it. And I had equity highs during the past month. Oh, whew. Love to hear that, Jackson. Nice going. Jesse, if anyone listening is on the fence about taking Greg's course, take the course. The return on investment is priceless and the cost is so low for the amount he teaches you. He also gave me 10% veterans discount. Thanks, G. Thanks, Jesse. Very happy to give the 10% veterans discount. 100%. And you are a great student, Jesse. Just outstanding human being. And thank you for that. And it was, really like just a wonderful thing and blessing to meet all my students. I've met so many just interesting and just outstanding people. So thank you, Jesse. Being Greg, if you buy half position of SPY now, would you be breaking the rules, which I believe Linzan Saunders' statistic is based on buying full positions each day? Yeah, a little bit. Yes, a little bit. But, it's okay to put your filters on there. And, after these huge days, I just decided, look, I'm just going to half my position. Volatility's picked up by more than double. So, again, it's back to risk, but it's okay to have your own filters. My filter might be, look, when we get back above the 250 or we get back above the 200-day moving average, then I'll throw it back to a regular position. But yes, you are correct. Her back test was 100% straight across the board. But again, like with my regular trades, if it's under the 200, I take a half position. If it's over, I take a full. I mean, that's helped on a lot of things lately. That filter has helped a lot. But yes, you're right, Bing-Hee. Anyone else take any other positions today at all? Or have any questions or jokes or have any plans for the weekend? Anything exciting? I'm teaching tonight and I'm teaching tomorrow. And if Catherine is out there in Aruba, it was nice speaking with you. Really nice speaking with you. And I hope you got my email on some of the pros and cons of what we discussed. I just saw a little thing here. 2.2 million shares of Exxon bought at the close. Wow. Can you imagine how much money that is? Frank says, I think Liz Ann would approve of wiggle room in this environment. Yeah. Here's the thing. If volatility is 1 and then it goes to 2, it's like doubling your position, right? So if volatility is a 1 and it goes to 2, halving your position is still the same as having a full position when it's 1. Hope that makes sense. But I mean, think about it. We're used to the Dow moving 100, 200, 300 points. Now we're moving 1,000 to 2,000. I mean, that's like 5 times the volatility. Half position may even be too big. Whew. Trump says UK may be added to European travel restrictions. So I haven't been to the gym in about a week because I haven't wanted to go in. I've heard some friends of mine tell me their gyms are closed. So I've just been doing a lot of hiking out there. Jackson says, regarding the SPY trade, there are some probabilistic additions you can add to help avoid some risk, therefore to make profitable over time. Yeah, I'm sure, Jackson's been doing such a great job. He's a great coder. He's been doing all sorts of, basically adding filters onto the SPY trade. I'm not sure exactly what they are, but if you ever feel like sharing them here, Jackson, please do. Dan says, super happy teacher and students successfully navigate this complex historic market. Is that a headline you read somewhere? Or super happy teacher and students successfully navigating this complex market? Well, I'll tell you, the amount of calls I've had from people about what to do and where to do, and it's hard to give people advice, right? Especially if they're not traders, they don't really understand anything I'm talking about. 200 day, what's that? Do I buy more here? Do I sell more on strength? What do I do? And you just can't give somebody one solid answer. It depends upon what their goals are and how much money they're dealing with and what their time frames are. Frank says, the problem is people that feel great will get restless and head out. Yes, you're right, Frank. I mean, who knows? I mean, I might have it. You might have it. We just don't know yet. We're asymptomatic. I don't know. It's something. My next door neighbor works on the military base and is an EMT over, or a physician assistant over there. And, they have some in the pediatric ward, and I haven't heard anything about that on the news. Jesse says, look at those increases across the stocks you have tagged at the bottom of your screen, Greg. Crazy times. They are crazy. Yeah, huge up days. But do you remember the last huge up days we had? I remember I bought here and immediately got sold into. So I'm a little concerned about this move here, especially waiting and buying it at the end. Again, that's why, with puts, I really have done a lot of thinking about this. And although, of course you're going to make more money with directional trades, I'm trying to give myself, like Frank says, a little wiggle room as far as having to be so precise. And I'm only doing this because the premiums are so high. Literally 6, 8, 10, 12, 15% annualized returns with 20 to 30% protection. That's pretty good. Oh, I'm talking about you and your students. Thanks, Dan. Yep. Well, I hope my students are successfully navigating this. Listen, if you're primarily a long only trader, it is there's no way you've made money in this market, right? I certainly haven't. I got whooped up on pretty good. But again, I'm not trying to make it back by tomorrow. I want to, of course. I'm just being honest. I would love to make it back. And days like today, you can look back and go, oh, I should have loaded up the boat. I knew it was too low. But then if you would have, and if it would have gone crashing down, then you'd be like, what was I doing? I was trying to catch a falling knife, right? So, I'm looking at taking the next 3 months maybe to try to make back what I've lost in this. But the main thing is I want to stay in this trading game, right? Just like we talked about in psychology, I want to do this for years and years and years and years. And I'm not going to stake all my capital and everything on 1 month in a market. Bing He, when I bought SAP, though the stop loss is beyond my normal 3%, I convinced to take it anyway as I intended to trade less. Instead of taking 2 trades, I reduced to 1, taking same as taking half position. That is true. That is true, Bing He. Jackson said, adding rules and only adding them when they add a quantifiable edge over time. Yep, that sounds like Jackson right there. Regarding coronavirus, I know people who get cans of baked beans, but honestly, I'd urge people to bolster their immune system by eating real food, get plenty of sleep, walk trying to reduce stress. Yes, I think it's good advice. Frank says, the bottom line is a trader must trust their judgment. Yes, sir. And that comes with experience. Jackson says, regarding the wiggle room, Greg, I have about 30 rules in my algo that fire off under different conditions. But basically, a strong V1 to the downside is a good signal to not trade the next day. So you're talking about if a V1 happened to not take the overnight SPY trade. Is that what you're saying, Jackson, if I'm understanding you correctly? Which to me totally makes sense because V1s are bearish signals to the downside. Okay, so listen, it's 2:30. I'm going to head out for my walk, then I'm teaching lessons. So just a couple things to leave you with. One, please, please, please always try to go out, do something nice for somebody today. Just a smile or a wave or hold the door open or help them in one little way here and there. You really may have it make a huge impact on their day, and it's going to be good for you. It's the right thing to do. And so, you know, if you could do that for a human every day, that would be fantastic. If you could do it for an animal every day, that would be even better. Do both of them is wonderful. Well, I'm not saying that the animal was better than the human. I'm just saying both of them would be better than just one if you could, right? And who knows, someday when you're down or having a tough day, somebody might do something for you, and you'll be glad that they did. So that, and then like I said, before you get out of here, if you don't mind, if you could hit the thumbs up button, I would really, really appreciate that. Joe says, I may need some stitches. Tried to catch the JP Morgan knife that was thrown upwards. Oh. Does that mean you were short, Joe? Or you? Oh, 18%. Wow. Or you bought it high and you're worried about underneath. Not sure. Alton. Hi, Alton. Nice to see you. Appreciate you coming. Trump asked Energy Department to purchase oil for strategic petroleum reserves. Should I try to buy the oil stocks? Well, that's, you know, that's a hard answer to give somebody, Alton. I usually don't want to trade just off of news. You know, when I look at the oil chart here, let's see, close 94, 96. We did have a V1 here. I really couldn't say. I don't like to buy off of news. I like to buy just based upon the structure and the setup on the chart. And I don't really see anything here specifically that would make me go and rush and buy oil. You know, if I were going to do something with oil, just like I did with a lot of my other positions today, I would probably sell puts at $5 and give yourself 50% to the downside and still get a good premium because of the volatility. So I know that's not a great answer, Alton, but my honest opinion is I would not buy oil just based upon that. Jackson said, there are some small parameters of ATR movements, but yes, over time it cuts you out of bad times. Makes sense. You'll miss out on profit here and there, but it's quantifiable rule that makes money over time. Take care, Joe. Good seeing you, my friend. Joe's short. Okay. Alton said, so I would have to wait until they make a deal. Well, I'm not saying that. I mean, I'm not saying I wouldn't recommend that. I mean, I don't know your situation, Alton, but I was just giving you my opinion. So I really wouldn't, I don't want to give you any advice or any suggestions, but just me personally looking at oil, just based upon that, I personally would not buy oil. Doesn't mean it's not going to go up. Doesn't mean it's not going to go down. Frank says, oil market is a real specialty. Yes, it is. So, Joe, you shorted JP Morgan. You know, I was talking earlier about, bottoms being better bottoms when you have a big down move and then you have a big up move on much higher volume. Even though we had a big rally today, you can see today's volume was not as high as the down volume, which, I interpret as bearish. All right, everybody, I am out of here. Thank you so much for coming by. Really appreciate it. I hope everyone has a good weekend. Be safe out there. Wash your hands. All that kind of stuff, please. Yeah. And I'm going to subscribe giving your opinion. I am going to subscribe for giving your opinion. Oh, okay. Well, that was just my opinion, but yeah, oil's a weird market. I wouldn't buy oil just based upon what I see out on this chart, and I certainly would not buy something just because of news, right? Joe short at 97.84. Hey, that's the first time we've had some short positions on here. Ooh, 97.84. Okay. All right, I got you down there. If I'm looking at this chart from the upside, we did close above the negative third ATR channel. We did not get to the 10. We have a confluence of resistance above us here at the 20 and the negative 1 ATR channel. So, my guess, if it keeps going up, it might get stopped here or here, but who knows? Okay, Zach, good to see you, bud. Jackson, good night, my friend. Good to see you. Thanks, Frank. Good to see you. Dan, thank you. Joe, gonna have to take a big loss. Well, we'll see. We'll see. Hopefully not. Ramble says, this rally at the end is crazy. This makes me much more afraid of what's going to happen when it finally catches up with us. Yeah, I don't disagree. I don't disagree. All right, everybody, have a good weekend. Be safe, wash your hands, and be kind to each other, right? And everyone. And I will see you, God willing, on Monday during the last hour of the market. Okay, take care now. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.